Good morning, everyone. It is Tuesday, November 20th. I'm Jonathan van Clute with Stock Navigators, and I am here to talk to you about the markets. And this is actually going to be our last market analysis for the year. The holidays coming up and everything. We are going to take a break and retool and come back next year, and we'll see what that brings for us. But for now, as always, please do like, comment, subscribe. Let us know what you think about these analyses or these videos or what other things we can do to help you in your trading. Let's start with the S&P 500 because this is the one that everybody keeps asking me about, and everybody's freaking out and worried about, is it ever going to go back up, et cetera, et cetera. And to answer those questions, we need to look at a few things. First, let's look at right now. We obviously have retraced a significant portion of this up move that we had here. We had this nice bounce, and now we have retraced, and we are just about to the 76.4% retracement level. We also have a buy zone right below us, right in here, and that's where it previously bounced. It previously bounced right in the buy zone, got about a third of the way in, and then bounced right out. We're heading right for that zone again. Now, the Navigator is also getting stronger. It's moving bullishly. So it looks to me like we're looking to form either a double bottom or a first higher low of this pullback. Now, I want to point something out. Let's actually jump back in time. We're going to go on the old Wayback Machine here, and we're going to go back to 2000, and I believe this is 2006. Let me just... Yes, way back in 2006, the market pulled back significantly, and it had a severe correction, or a serious enough correction to worry a lot of people. And then look what happened. It double bottomed, right? Pretty much the exact same price level right there, just a smidge higher than previous. So first bottom here, bounce, retrace, second bottom here, and then off to the races, to the upside. Okay? Now, hang on one second here. Siri is thinking I'm talking to her, and I'm not, so let's turn her off. All right. Now, let's jump a little bit later in time, and let's go to... This is 2009, I believe. Yes, 2009. Now, here's an example where that didn't happen. Market doesn't always give us such a beautiful signal of what's going on. In this case, 2009, this example, the market, we all know what happened in 2008, 2009, the big global financial crisis, etc. And the market came down, hit hard, and then V-bottomed, just bam, and then that was it, off to the races. So no double bottom, just one shot, and that was your chance. And you didn't get a second opportunity, at least not to get in at these kinds of levels. So the market does not always play out this way, but it happens a lot. So to illustrate that, let's go forward in time a little further. And now we're talking about, what are we in now? We are in 2007. 2007, we had another sharp correction and another double bottom. First bottom here, second bottom here, ever so slightly higher. So we come down, we bounce, we retrace, and then it's off and running. So another example where it played out exactly like that. Now let's keep going later in time. And now we're in, what are we in now? We're in 2000 and, whoops, did I go the wrong way? I did go the wrong way. All right, let's try that again. There we go. That's the one we were just talking about. There it is. Okay. Now we are in 2010. And in 2010, we had a longer scenario. It took a little while to play out. It wasn't as quick as the others had been, but you can see that, again, we retraced down close to the 76.4 level. So we had our correction, bottom, bounce, and then our first higher low, and then off and running. Because this is what a trend has to do. By definition, it has to form that first higher low in order to become an uptrend. So that's what has to happen. And you don't always get the actual double bottom, both of them at the same level, but it happens a lot. But you certainly, at a minimum, are going to get a first higher low. By definition, you cannot have an uptrend without that. So it's always going to happen. So you're just looking for a pullback to probably somewhere around the 76.4 to the 100% level. That's going to be your first higher low or your double bottom. And there it happened again. Now, whoops, wrong way again. Did I pass it? Yes, I passed it. Oh, bark. Okay, there we go. Now, again, in this is what is this? This is on. This is 2011. There we go. 2011. All right, same exact scenario played out again. There it is. First bottom, second bottom, almost to the tick. So, and then from there on, I mean, we know what the market has done since 2011. It's been close to straight up. That being said, I did say close to straight up, not straight up. Here we go again. We had a sharp correction, and this was in 2015. And then we had a bounce, pull back to the 76.4 again, and then a nice rally. However, that one was kind of short-lived because there was a lot of things going on in the world at that time, and we had another little shocker, which gave us another correction, a bounce, and a double bottom. Same thing, and then off and running. So this kind of thing is totally normal. This is how markets move. There's nothing shocking or surprising here. Let's go later in time. And now we'll get up to earlier this year, February, even as recently as that. We had our correction low, a bounce. We actually kind of had a double bounce, but a double top. And then we had a pullback almost to that same low, just a smidge above it. So definitely between the 76.4 and the 100%. And then, of course, at that point, the last, this year has been up, 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 and away. And now we have this correction forming. And here's what we're looking at. We're right at or right above the 76.4 level. And I'm looking for a pullback to somewhere in here between 76.4 and 100%. That's our double bottom. And that's typically what is likely to happen. So that's what we're watching for. There's nothing shocking or unusual about any of this. Just have to be prepared for it and know what to look for. So that's what we're looking for. We're looking for something in here. Now, obviously, if it takes out this low in a significant fashion and really heads lower, then we have a bigger problem on our hands. But at the moment, anyway, all the signs that I'm seeing are saying we're looking to form that double bottom or first higher low somewhere in this area. Now, it is a holiday week that throws things into a little bit of a turmoil there, because who knows what's going to happen with the thin volume and thin participation with people leaving for the holidays and that kind of thing. So we'll have to wait and see what happens. But, if we follow past patterns of getting a holiday rally, then this would be a good setup for that. A nice pullback to here, a double bottom, and then we can have our holiday rally. So that's what I'm looking for. Will it happen or not? Well, we'll have to wait and see. I don't know yet. But it happens a lot, and it is very standard and very typical. So keep your eyes out for that. On the intraday basis, if you're a short-term trader, clearly the trend right now is down. However, don't overlook the fact that we are pretty darn oversold. We are very, very extreme to the downside. We're flashing all kinds of magenta here, and price is still continuing to slide lower. So I would be very wary about jumping on this short bandwagon at this point. If you do, keep your stops really tight and be in and out. Be a short-term trader. Don't expect any home runs out of this. Just grab what you can and run. So that's the S&P 500. I think that gets us what we need to know for now. Let's take a look at crude oil, which is just stuck in this buy zone. It's been bouncing around in here, going nowhere, just absolutely sideways. I mean, it's just crazy how tightly how tightly compressed, tightly packed it is in that area. I mean, poked above, poked below, but mostly it's just stuck right in there. Lots of magenta, so this is an oversold, exhausted condition. I don't think there's any likelihood of it continuing lower. I don't see much energy left in this. So I would be looking and waiting to set up for a bounce to the upside. Intraday, of course, there's swings. There's swings to be had. So if you're an intraday trader, you've got plenty of opportunities. Now, notice the Navigator, however, it was up high, poked below the zero line, and then it just is not wanting to go down. So all the momentum, all the energy is looking to be to the upside right now. So that is what I would be looking to play. This is a good time to look at getting long because you can put a stop right below maybe the recent lows, or potentially even just below the zone, if you don't want to go that far, if your risk parameters don't allow for that. So you've got a good low risk entry point here to the long side, and you just need to let it set up. Maybe wait for a little bit more confirmation. Maybe wait for a poke above the top of the zone here or something like that if you want to be a little bit more sure yourself. But if you don't mind a little bit of unknown, a little bit of what's sometimes called information risk, then you can just go ahead and stick your stop down here and go long here and see if the technicals play out, because right now everything is looking like it wants to bounce to the upside. So that's what I would be looking for in terms of a trade opportunity. Gold, not terribly surprisingly, has been bouncing upwards with the move down, the retracement in the market, and uncertainty and all of that good stuff. Gold tends to be the safe haven, they say. So not terribly surprised to see it bouncing up, but also just on a technical standpoint, it's been bouncing around back and forth between these two channel lines. So it made sense that it was likely to want to head higher and potentially try to retest this channel line if it can actually get enough momentum to get all the way up there. I don't know if it's got it in it to get up there, but certainly it's managing to get back into this congestion zone here. Navigator has dipped below the zero line, but now has already started to come back up again. So there definitely is some bullish strength in gold right now. I mean, you can see it from all the way back there. Definitely the bulls are in control at the moment. On the intraday basis, again, you've got a trend line here. I'm just going to draw a sloppy hand-drawn one. But you can see that the trend is up. We are getting a series of higher highs and higher lows. But that being said, notice that the higher highs are not that much higher. It's just going a tiny bit higher each time, and each time it does, the sellers just drive it back down again. So right now, I mean, you can see the high was here, and the sellers just slammed it back down, and that's just this hour. So there's definitely some selling pressure going on up here. I wouldn't be surprised to see one last little push higher in gold as we get potentially the last of this retracement in the S&P and in the broader markets in general, and then probably see gold start to head lower as the market adjusts and changes into a new uptrend. So we'll have to see if that actually plays out. But right now, anyway, it looks like the sellers really want to sell gold up at these levels, up at like the 1220 to 1230 area. Or not so much 1220, that's way down there. Sorry, more like a 1226-ish. So basically up in this zone here, the sellers are wanting to come in. So watch out for that. If you're looking to get long, just be careful, play it tight. Don't expect a huge home run. Just take what you can. Always sound advice to take your profits when they present. Bitcoin getting slammed. The crypto market has definitely kind of gone into a free fall at the moment, and unfortunately, there's no data to the left for me to look at in TradeStation because they haven't had crypto data that long. So right now, how far could it go? Anyone's guess. But there's no question we have a huge low, lower high, low, lower high. I can't draw this morning apparently. But the bottom line is the trend is obviously down. Now, that being said, we've also got a lot of magenta going on the daily chart. So this is a heck of a move down very, very rapidly, and not surprised that it's getting exhausted already and kind of wanting to cool off a little bit. So I wouldn't be terribly surprised if we go sideways a bit. This is not all that dissimilar from the big shocks that we were having earlier. And shock and then sideways, and then shock and then sideways, etc. We kept seeing these big moves followed by sideways action because the market needs to digest those moves. So in crypto right now, unfortunately, winter is still upon us, and no way to really know when that's going to change, if that's going to change. So intraday is probably the way to be if you're looking to trade crypto, unless you're really long term. If you have a really long term outlook, then hey, it's on sale. Add some more, accumulate some more potentially. So if you're an intraday trader, though, obviously you're looking to play the moves, play the swings, and there is still no shortage of volatility in Bitcoin as always. There is always movement to be had. So, but we are down. Well below the 5,000 level here. That was a key psychological level for sure, and we broke it up here. So things are bad on the crypto front right now. There's no question about it. Navigator on the intraday is ticking slightly higher, so maybe there's some buying going on there. But right now, it would be catching a falling knife to try to grab anything at this particular level. Pardon me, a surprise sneeze caught me. All right. Let's finish up with natural gas and then get ready for the day's trading. Natural gas still very much the bulls are in control, which as long as there's weather events happening, that's not all that surprising. We did have intraday on the 60-minute. The Navigator trended lower, got to the zero line, and just barely breached it, and now has come back above it. So it looks like the bulls are not ready to give up yet. They are not giving up without a fight. But right now we've got the higher highs and higher lows pattern. Higher high, higher low, higher high. Not a higher low, a lower low. So it could very well be that this trend is running out of steam. We'll have to see if it cannot make a higher high. If it fails out somewhere around here, maybe, or even if this is it, then we can look for a correction, and the bulls will probably step aside as the bears take over. So that's kind of what I'd be watching in natural gas. I mean, obviously to the bull side, you're looking for a takeout of that high there, but that would take a huge push at this point. And after the move up that natural gas has had already, I don't think that is terribly likely. That doesn't seem like a high probability event to me. So I would be waiting to look for a sign of a trend reversal to the downside. Maybe a break of the box, a close of the box below the green line, combined with a Navigator to the downside. Because, I mean, you did have a close below here, below the green line, but you still had Navigator not really able to get very low. It just didn't have a lot of energy behind it. So got to watch out for that. So watch for something to indicate there's some definite momentum happening to the downside, or watch for a takeout of these highs here to the upside if you're really determined to get bullish on natural gas. But it's a dicey area at this point. This is a tricky, treacherous area to be trading in, because this is all about the weather, and that can change at the drop of a hat on a moment's notice. So you got to watch out. Be really careful. Keep very tight stops, and don't let anything run away from you. Well, that's it for my analysis. Last one of the year, last morning analysis of the year. I will be here this afternoon, of course, 1 o'clock, and for the final afternoon post-market analysis. And I'd love to see you there. Love to be joined by anybody. If anybody is live, always feel free to say hi in the chat. Would love to see you. Also, if you happen to be in the discourse room, feel free to say hello there. And as always, please do like, comment, and subscribe, and let us know if there's anything else that we can do to help you in your trading. We've got a whole bunch of stuff planned for next year, which is what we're going to be gearing up for in the last month or so of the year. So look forward to that. I can't wait to see what 2019 is going to bring, and I hope that your holiday season is a good one. And if you do any trading for the remainder of the year, I hope it goes well for you. But as always, tread carefully, keep tight stops, keep good money management practices, good position sizing, etc. And, don't give up your capital. Rule number 1, don't lose money. Remember that. So that's it for me, Jonathan Van Clute with Stock Navigators. I hope you have a great trading day. I'm going to go get ready for mine. Take care and be well.